when people are evaluating, whether to go work for company A or company B, I rarely hear them think about taxes.
Okay.
And I'm not sure that's necessarily correct, but that has been my experience. Taxes are important. I don't think they're the most important. I think when we need to think of potential returns, we need to think of potential after-tax returns. Let's compare two offers as an example. Offer A, I make $1 million is what they're going to pay me. All W-2 salary,
Okay.
no equity comp. Offer number two, they pay me $250,000 a year, and I get $750,000 in different variations of equity comp.
Right.
Well, in this case, it'll probably be more than 750, but to true it up. But let's just say it's 750.
Okay.
Executive number one is going to have a very different outcome. At a 37% tax rate,
Right.
his after tax is going to be about 630. And as you know, that W-2 income, if it's W-2, might as well be written in Sharpie because there's not a lot you can do on the W-2 to get it to go down. Executive number two has more options. $250,000, he's probably making a living wage. They can probably pay all of their monthly bills plus their taxes.
Right.
So now you have $750,000. If it's equity comp, it's generally going to be deferred in some sort of way from an income standpoint. So now I have planning opportunities. When I take I'm assuming in my example, the equity is performing at least as well as the S&P 500.
Okay.
But I have an opportunity there. I have some tax planning opportunities. Maybe my spouse was laid off in this year. So this year our income is temporarily lower. Maybe that's an opportunity for me to exercise some of my equity comp in a lower tax year.
Right.
And so you start to be able to control a little bit more of your own destiny.
So I think that all goes back to like a really high level point, which is the taxation of labor and the taxation of capital is totally different. And so if you have a more equity forward compensation package, then you have, like you said, a lot more options in terms of planning your taxes. And so that's certainly something that's worth considering on the way in.